Hello traders and welcome back to the Forex Geek. Today's analysis focuses on one of the most significant harmonic patterns in technical analysis, which is the Cypher pattern. So this advanced formation has gained recognition among technical analysts for its ability to identify precise market reversals and potential trade setups. So in this video you will learn how to spot this pattern across different time frames, understand its specific Fibonacci measurements, and master the exact entry and exit points for effective risk management. So the cipher pattern structure, the cipher pattern structured approach to market analysis makes it an essential tool for your trading arsenal. So stay with me until the end of this video as I show you how to implement this strategy in your daily trading routine. So let's get started. First of all, what is the cipher pattern? So the cipher pattern, like I said, belongs to the family of harmonic patterns characterized by its distinctive XABCD structure that forms specific geometric price movements. So this pattern emerged from the study of natural market movements and follows strict Fibonacci relationships between its points. So at its core, the cipher pattern represents a natural market rhythm where price moves through 5 specific points. The pattern begins at point X, moves to point A, retraces to point B, extends to point C, and finally completes at point D. So each leg of this movement adheres to precise Fibonacci measurements. So you encounter two variations of this pattern. We have the bullish and the bearish cipher pattern. This is the bullish cipher pattern and this is the bearish cipher pattern. So the bullish cipher pattern forms at the bottom of bearish trends or during uptrends, and it signals potential upward reversals, while the bearish cipher appears in downtrends or at the top of uptrends and indicates possible downward reversals. So understanding these variations gives you a clear advantage in identifying potential market turning points. So let's talk about how to identify the cipher pattern, both the bullish and the bearish cipher pattern. So this is a trading view platform, and you just go to the patterns here, patterns category. You could select cipher pattern or you could select the XABCD pattern, anyone you choose. I'm just gonna select the cipher pattern, and you first identify the initial impulse move from point X to point A. So this leg establishes the pattern's direction. Next, look for retracement from point A to point B. Now, point B should retrace between 38.2% to 61.8% of the X to A leg. So I'm going to add the Fibonacci just after this to measure all of that. So from point B, price should extend to point C, reaching 127.2% to 141.4% of the AB leg. So this extension is crucial for validating the pattern. So finally, watch for a retracement from C to D, which should end at the 78.6% retracement of retracement level of the X to C leg. So I'm just gonna add our Fibonacci to this to help us measure from the X. From the X to A leg, we want to know if the B falls between the 38.2% and the 61.8%. You can see, yes, the B falls between the 38.2 and 61.8%. So the C here is an extension. Just delete this. The C should fall from the A to B leg. The C should fall within the 127.2% to 141.4% of the AB leg. So it should be between 127.2 and 141.4%, which is this. So this is how it should be. And the D leg should fall between should end at the 78.6% retracement level of the X to C leg. So let me just delete this, and from the X to C, you should have the D end at the 78.6% level, as you can see. So anywhere between here to here. around here. Exactly. So this is a perfect cipher pattern. This is how it should look like, and you should follow this Fibonacci levels to accurately identify these levels. You can use your charting platforms, Fibonacci retracement and extension tools. This is a trading view, so I use the Fibonacci retracement. So apply these tools to the XA, the AB, and the XC legs respectively to confirm the pattern's validity, like I just did. So a true cipher pattern adheres to closely to these Fibonacci ratios. While slight variations can occur, significant deviations often indicate a different pattern or an invalid setup. So when you identify this pattern correctly, it provides clear entry points, stop levels, and target areas for your trades. So let's get into the charts. Let's find out how we can use this cipher patterns to trade. Let's talk about trading the cipher pattern on the charts. As you can see, this was a bullish leg, and like we said, you first identify the X to A retracement to B, extension to C, and a retracement to D. And if you use the Fibonacci, you're gonna see that yes, from X to C, you can see the D falls perfectly with the 78.6% Fibonacci ratio. And I'm just gonna check for the B. The B falls perfectly with the 61.8% Fibonacci ratio. You can see that. And if you want to check for the C, you can see that the C falls perfectly with the 127.2% Fibonacci ratio. Just gonna zoom in so you can see that. So this is a perfect bullish cipher pattern. So the ideal entry point for a cipher pattern trade is at point D. So this is where the pattern completes and the potential reversal begins. So for bullish patterns like this one, you can place your stop loss just below. You can enter at D and place your stop loss just below the X. And for bearish patterns, set it just above point X. We're going to talk about bearish patterns later, but let's just look at the bullish cipher patterns for now. So your take profit could be at C, or you could use the Fibonacci extensions and to target further levels. Fibonacci extensions from point C to X. You could target 141.4% from the XC leg, which is this, and that is how you can trade the bullish cipher pattern. The entry point, the ideal entry point, is from point D. Your stop loss just below point X, and you could aim for point C, or you could aim for a Fibonacci retracement at 141.2 percent, 141.4%. Sorry. So this is for the bullish. Let's just look for the bearish pattern, and let me just look for the bearish cipher pattern. Okay, I have some here. So you can see this, we were bullish right here, and this was just for a retracement. We broke structure to the upside, and this was for a retracement, yes. And you can see price giving us this bearish cipher pattern right here, and you see the first X to A, then retracement to B, an extension to C, and the last bus stop at D. And if you want to measure this, you're gonna see that X to C, and D falls perfectly with the 0.78 78.6% ratio, Fibonacci ratio, or the 0.786, either one, anyone you want to call it. So, and if you check this from point A to point B, you see that the point C falls within the 127.2 ratio, just close. It didn't fall exactly at it, but just very close to it, and it's not much of a variation. Of course, variations can occur, but when it's far apart, then the setup becomes invalid, like we discussed. But this one just a little bit, and you could enter a short position from here with your stop loss just above X, like we said, and your take profit at C, or your take profit could be from C to X, and your take profit could be at the 141.4% Fibonacci extension, Fibonacci ratio. Yeah, we had another one here. We had another bearish cipher pattern here, and like we discussed, your entry could be here at that point D, or you could wait for confirmations. You could use confirmations like the RSI or the moving averages to verify your setups before entry, to be sure of your trades and not just enter blindly. And your take profit could be at C or at the extension, anyone you choose. So I would advise you take partial profits at point A, which is here, this level. You could take partial profits at point A, or you could extend your target to point C for larger gains, or you use Fibonacci extensions levels of the AD leg for additional profit targets like we did. So that is how you can use the cipher pattern in your trading. Alright traders, we've come to the end of today's video. If you found this information valuable, don't forget to hit the like button and subscribe to the channel. Turn on the notification bell to stay updated with more forex trading insights and strategies. Your support helps us continue providing high quality content to traders worldwide. Until next time, stay disciplined, manage your risk, and happy trading.